Welcome to Launchbase, a fast-paced podcast exploring the latest in tech funding and product launches. In under 30 minutes, we break down key trends, interview industry leaders, and uncover what's driving the next wave of innovation. And now your host, John Radford.
Hello, and welcome to another episode of Launchbase. This is the podcast that dives into all things tech in under 30 minutes. So I'm your host, John Radford, and each week I chat with individuals who are shaping the landscape of tech, be it in the startup, scale-up, product, tech, investment, you name it, we've got it covered. So today, I am thrilled to be joined by Jonathan Keeling. Jonathan is partner at Haatch, founder of Edge, a Ned at Winify, and he brings a wealth of experience with him, having joined as an early employee at CrowdCube and helped them raise over $1 billion for 1,000 startups. He's now working as a partner at Haatch, helping them take them from 50 million to 250 million AUM. With his expertise in B2B SaaS investments and crowdfunding, Jonathan has been instrumental in helping businesses achieve high impact growth. In this episode, we're going to be exploring his career journey, insights into crowdfunding, should be interesting, marketing and growth, and his vision for the future of tech startups. Jonathan, welcome.
Thank you, John. Pleasure to be here. Really appreciate having me on.
Well, thank you for coming on. I hope that intro was okay, but is there anything else you'd like to add or by way of introduction for yourself? Perhaps you can give us a little bit more.
Incredibly distinguished. Yeah, I will take that one. I'll notch it down and reuse it. I'd love to say I'm a seasoned B2B SaaS investor, but that's absolutely not me. Luckily, We've got some incredible team members at Haatch doing the actual investing. I'm very much on the fundraising side and growth side for Haatch as a brand, and that's the role I played at CrowdCube and also the advisory bits and bobs that I do as well.
Excellent. So I think we're gonna talk about that fundraising bit in particular, because perhaps we can go back to CrowdCube and then we'll start backwards to forwards, if that's okay. Sure. And we'll go back to CrowdCube. And you mentioned the fundraising, so I'm going to pick that apart first, if that's okay, and then we're going to get on to crowdfunding and the do's and don'ts and all that sort of stuff, because I'm pretty confident there's going to be a lot of people who are interested in that side of things. And you're smiling wryly because I'm sure you've been asked this many, many times. So apologies in advance. But so let's talk about that kind of the fundraising side and what you've done there and what your experience is there. And then there might be some questions that come off the back of that.
Yeah, sure. So my current role, I'm quite new, but I'm a partner at Haatch. We're a UK leading pre-seed and seed B2B SaaS investor. Mm-hmm. Now, what that means is that we write first checks into high growth B2B companies, B2B SaaS being business-to-business software as a service companies that have global potential, that are looking to solve deep pain points that companies have at scale. Yeah. And that sounds like lots of buzzwords, but in reality, what we're looking for is market fit with the pain and the solution that the company and the founder is solving. So do you want me to tell you a bit more about Haatch?
Please do. I mean, I'd be interested to know the kind of the check sizes that you guys tend to cut, and when you talk about the market fit and the pain versus solution, how you guys are quantifying that. That would be really super interesting for people, because I know that's one of the things that people always want to know, right?
Yeah. So Haatch has a pre-seed fund, which is investing in SEIS qualifying deals in the UK. Mm-hmm. So seed enterprise investment scheme deals, which is the 250k company side allocation available to companies to basically take you from inception to what we aim for, which is supporting them to their first million of ARR. Yeah. And if we can accelerate them through that process with both cash and operating experience and growth through our network and systems capabilities, like we have a lot of ex-founders, ex-entrepreneurs, ex-operators at Haatch, and we also have an operating partner ecosystem, then that's, I guess, like the additional strategic support that we offer beyond capital. Sure. So our pre-seed check out of the SEIS fund is 250k, topped up with 85k from the British Business Investments, which is a subsidiary of the British Business Bank.
Right.
And essentially they have done their DD on us, and they effectively blindly write checks alongside us. So
Excellent.
they piggyback our due diligence and co-invest is the better term alongside our pre-seed fund.
Sure.
They do the same for our seed fund, and our seed fund is EIS qualifying, and we target around 300 to 500k checks in 4 to 6 qualifying businesses. And these funds are raised and deployed every quarter. So we're doing about a deal a week across both funds. And the business, Haatch, that is, has been going for circa a decade. Started off as a angel network, effectively piggybacked off our two general partners' track record of building, selling, and investing in businesses. So Scott, who is one of our co-founders, took Kiddie Care online, launched and sold it to Morrison's, and him and our other general partner were also involved in Elevate and its subsequent acquisition to a New York Stock Exchange listed business. They effectively started angel investing, which then sort of snowballed into a syndicate, which then later snowballed into a fund. So as a fund, Haatch has been operating since for the last 5 years or so. We've got 100 portfolio companies, just shy of $1 billion of enterprise value across those 100 companies. There's 1,400 investors across the Haatch funds.
Wow.
So they're underlying, I guess, individual LPs, but many of them are high net worths.
Yeah.
And the aim is to continue growing, I guess, the amount we raise, the amount we deploy. We're on a really, really strong trajectory at the moment. And the kind of most stark fact that I was surprised by is that over 80% of the portfolio are actually under 3 years. So a huge amount of what we've done has really been in the very near term, and we're pushing to kind of accelerate that. Hence my inclusion in the team, and also a couple of other new starters as well.
Sure. So some of this is going against the narrative of the doom and gloom, to be honest. I mean, if you're talking about cutting a deal a week and all of this high growth, are you against the narrative, or is this just that the narrative is false and actually it's not all doom and gloom out there?
Look, I think the impact has been felt across the board, but I think absolutely in sort of mid cap, clearly like large cap stuff, maybe not so much. They've driven through innovation, but if you look at the kind of pre-Series A, Series B part of the market, I think that's been a real challenge. Yeah. At the end of the day, for the pre-seed and seed stage, it's not like the founders turned off and there were no more good ideas.
Oh no, there's plenty of those.
So if the capital is there to invest, then certainly the opportunities are there to sort of take the money. So look, I was part of the. Would I say boom and bust? I think in reality it was the boom of the fundraising market to the top of 21, and I was right at the sharp end of that, at the kind of front row of CrowdCube, and we tracked in line with the market, and then the floor fell out basically in 22. So that followed with a third of the business being made redundant, and that was the same for our competitors. It was the same for pretty much everyone in the startup and scale-up ecosystem who wasn't profitable. Yeah, I mean, the narrative switched from investors demanding growth to investors demanding profit.
Yeah, and that's a really good point. And yeah, it's one that I see a lot, and particularly in the UK market. And this may be true or false, but there's a feeling that UK investors have that they need to see that profitability, and they're not quite as sort of free with their cash in terms of the US investors will still be a little bit freer with their money in terms of they'll see that kind of, all right, we're not doing numbers, we're not doing money at the moment, but the kind of the 10x or 100x potential is still there, so we'll invest. Whereas a UK investor might want to see that capital early on, or that revenue. Is that the case? Certainly from what you're saying?
Yeah, it certainly feels that way. I mean, my experience is very much UK, Europe. And I feel like, sadly, it feels like we built the ecosystem for exits to a US sort of bigger partner, or a US sort of They've already sort of highlighted that could be our acquirer.
Yeah.
And there is maybe, the size of the venture market is linked to the ambition, but we're not setting the right sort of intentions of ambition, I guess, early enough for some of these founders.
Sure.
But is that possible with the amount of capital that is actually flowing into the ecosystem? I think my reflection on this, looking at it, is the recycling of capital is a fundamental part of driving the ecosystem forward in terms of size of checks, size of companies, and size of ambition.
Yeah.
And if you look at the cycle in the US, they are 5 to 10 years ahead of us in terms of the first wave of money from very, either founders or operators that could reinvest back in the ecosystem, like millions of pounds. And I don't really feel like we've seen that at a meaningful level yet in the UK and European ecosystem, because of the fact that companies are staying private for longer, because of the fact that liquidity has been really crunched and people haven't had much availability to get liquidity. But I think that will be the big shift in 25 and 26 and beyond, is that the ability to sell down on private options if you're an employee, or private positions if you're an investor, or private shares if you're a co-founder. You might be sitting on millions of pounds worth of paper worth, but you're still renting a a 2-bed in zone 6 because you can't get any of the money, right? So I think that'll be the shift, and that's where the US were very much ahead of us, is recycling capital into the ecosystem.
Yeah, sure. Okay, if you don't mind, I'm going to go back to sort of the founders who come to you guys at Haatch. Is there a process that you go through? If I am a founder who wants to approach you guys, what do I need to have in place already before I come knocking on your door? And when I do knock on your door, how do I increase my chances of getting a response?
Yeah, I think it's the same stuff for all VCs, really. I mean, like, warm intros are good. Certainly an understanding of what we look for in our thesis. So, blind is like putting a blind CV into a job, right? But being able to network across our portfolio founders, to which is very big already, and understanding what made it work for them. In reality, we have a very robust data-driven approach to finding the right opportunities. We have 2 people core in the investment team, a lot of analysts who are part-time, and obviously partners jump in. But in reality, sifting through thousands and thousands of opportunities, you've got to stand out. And it sounds cliche, but you have to. Showing that you've done X, Y, Z in terms of the business plan, or you've got to revenue generation, you've bootstrapped to a certain position, whatever that might be, then it's fundamental, really, to opening the door.
First-time founder versus second-time founder. Thoughts on that one?
Yeah, well, I'm biased. I mean, I'm not an investor, again, for clarity.
No. Yeah,
you should see my portfolio. But I think for me, like, looking at the wave of the founders that we worked with at CrowdCube, which is where a lot of my experience was, the ones that got put up in the spotlight, the fame, the fortune, and were made out to be the best. Were
the overfunders, so to speak.
Yeah. Often the youngest, right? And often the great stories to tell for the media. So I think that stereotype, or that persona of, this first-time founder who became a millionaire overnight, or whatever it might be, they're very, very rare. You might read about them a lot, but in reality, the best entrepreneurs are those that have got the battle scars,
battle hardened.
Exactly, 40 plus.
Well, they say the average age of a successful one is 44.
Didn't know that. It sounds about right.
Yeah. So and you've kind of, from a personal thing, like I said, I'm not an investor like you, but I work with a lot of startups, a lot of founders, and been in kind of the ecosystem for a long time. And what I see is kind of people who've sort of done a job for a said period of time, maybe kind of run their own business, and then looking to sort of exit that business, or maybe they've exited a previous business slightly unrelated, or they've done a job, and they've gained experience. They've gone and worked at a startup, and they kind of understood the ecosystem a little bit, but they have a sort of problem market fit, and they understand sort of, what they're trying to do, because they're sort of uniquely qualified, because they've been in that industry for a long time. And so it's that kind of founder market fit thing as well. And just get your sort of 20-year-olds fresh out of college. Like you say, it can happen, and it does happen, but it's rare.
It's got to be a boomer, right? I think it's a really interesting reflection, that, and actually something we proactively look for when outbounding. I think it's easy to think that all of the deals just come to VCs and they pick and
sure. No,
done,
yeah,
right?
this is good to know. This is good to hear.
VC partners are salespeople, really, right? Like, you're hustling to win the best deals, because your fund only exists if you've got quality deal flow and you're returning capital to your underlying investors. So you're only as good as your last deal, and you're only as good as your returning, your multiple of returning capital.
Yeah.
I think, to your point though, one thing that we proactively look for is people that have been in industry for a long period of time, have identified a pain point, and have come out of that industry passionate about the solution and the size of that opportunity that they could then replay back to the market.
Yeah.
So we've invested in those type of companies quite a few times, actually, and to good success, because, again, no one knows it better than the person who's been doing it for the last 15 years, right?
Yeah, and then they can sell it as well, which is something that
Exactly.
Founders kind of need to get comfortable with. I've found is that a lot of people will start a business to sort of free themselves from whatever it is they need freeing from, but actually the reality is that you've got to sell, and it's a graft, and you have to understand how to sell. And actually, if you're passionate about your solution and you have an understanding of your solution, then the selling becomes a little bit easier.
Founders are salespeople, 100%.
Yeah, they have to be. So founders are salespeople, and with sales comes a bit of marketing, and with marketing comes a bit of branding and all that sort of stuff. And that's your kind of sweet spot. And so that's what I'd like. Let's see what I did there. A little segue into that.
Beautiful.
Yeah, it was seamless, wasn't it? Let's talk about brand building, and when it's important to a startup, and how important it is to a startup who's coming to Haatch, for instance. They're in that, I guess if they're coming to you, they're in that sort of MVP stage, they're in that early stage. How important is brand in terms of building that narrative and raising investment and whatnot, or is it important?
Yeah, well, certainly not as important as sales.
No.
I think quite at a different. I wear two different hats, to be honest, and they're very, very different in that B2B SaaS investing isn't a very brand-led, or at least the founder's approach to market isn't typically a very brand-led approach to drive growth and sales and scale, etc.
Yeah.
Whereas on the crowdfunding side, and then if you look at Haatch as a brand, our ability to show up slightly differently and cut through the market, which is relatively well established in that, I'm talking fund management market here, and has a relatively well-trodden path in terms of how different funds have grown their cash AUM and have built into new channels. My look at the market is that there is a need for a different and a fresh approach to the market we're in. Mm-hmm. If I'm looking at B2B SaaS, I mean, again, you could have a landing page with a couple of words and no one really cares, within reason, right? It depends on what type of B2B proposition you have, but we've certainly got companies that have a handful of clients and are doing multi-million pounds worth of annual sales. You don't have a kind of broad brand-led go-to-market strategy. Certainly we've got everything in between, but it's thinking with those hats on, and then I could obviously talk to you at length about crowdfunding and that type of approach.
I might ask you to, if that's okay. As you mentioned the crowdfunding, I think it would be nice to just touch upon a few, because some people kind of see that as not an easy is the wrong word, but sort of we're just going to launch a crowdfunding campaign, that should do us, no worries, like I talked to some early stage founders, and that there's kind of this misconception that it's quite easy to do, and we'll just chuck it up there, and in comes the money. Perhaps you can talk to us about the reality of that and some of the do's or don'ts, and whether it's right for somebody, who it's right for.
Yeah, totally. I mean, it couldn't be further from the truth. And I think I'd argue possibly it's the hardest type of capital to raise, certainly if you're not comfortable with putting yourself out there or, storytelling.
And why is that? Because you just have to answer 1,000,001 questions from various people? Or
I think there's a bit of that. The best way to describe what crowdfunding ultimately is imagine a great looking pitch deck and cutting it up into lots of different digestible bits and then distributing that as a campaign with a call to action that anyone can invest in this brand.
Yeah.
I think you're then balancing those messages with storytelling, more emotive messaging, and then more hard messaging relate to the fact that this is a great investment opportunity for these reasons. Pitch decks are pretty done now. I mean, I've seen it all, I've read it all. At the end of the day, VC still ask for them, but it's quite fun and different to receive a different version of a pitch deck, I guess.
Yeah.
And the ultimate crowdfund wouldn't be a pitch page. It would just be a series of communication across different channels that are slowly being filtered into the person's consciousness about why they should invest in that brand,
right,
with a final CTA to be click now to own shares, right?
Yeah.
Now that's like utopia. Now clearly you need value on the other side, so the platform is bringing its own members and it's got its own email and all that other good stuff, which is a complementary part of it.
Sure.
But unless you're doing your own stuff and your own storytelling, and you're committing to what is a campaign and quite probably an unnatural one, and one where it could feel uncomfortable asking for money and putting yourself out there, then certainly it's not for you.
Sure.
It absolutely fits perfectly with B2C because of the fact that you can sell to customers. Being a customer is one step away from being a shareholder. You're kind of already bought in because you've paid for the service, or you've bought the peanut butter, or whatever it might be.
Yeah. A lot of people say your customers are your first shareholders. Yeah.
Well, there we go. Right.
Yeah.
Harder for B2B, but you can obviously lean heavily on the emotive storytelling side on the for B2B brands if that could work.
Yeah. So a couple of do's and don'ts if you're considering a crowdfunding campaign.
Yeah, as I said, don't do it if you don't understand it. If you don't understand what you're undertaking, I said it not long ago, but this goes for angel investing too. But the average startup investment is longer than the average marriage in the UK. So you're in it for the long term.
Yeah.
And if you're a founder, you're taking those 1,000 investors or 10,000 or 100 or whatever into your business on your cap table for longer than the average marriage in the UK. So you've got to know that you're pretty committed to wanting to look after them, keep them up to date, and then hopefully weaponize them a bit, right? Actually use them in the right way. Otherwise, what's the point?
Yeah, absolutely. So conscious of time, let's quickly move on to kind of 2025 and what that holds for yourselves and Haatch and kind of the B2B SaaS landscape. Where do you see things heading? We've gone the whole sort of 24 minutes so far, and we haven't mentioned AI. I just did, but does that play a part in your plans or your investments at all?
Yeah, I think so. About a third of our investments over the last 12 months or so have been in sort of AI or vertical AI, some form of AI enabled take on the market.
Yeah.
We're not looking our thesis isn't sort of fixed to investing in infrastructure AI. It's more businesses that are using it to drive forward a particular product or solution at pace.
AI powered.
There we go. Yeah. You should be on this side. So absolutely, it's a core part. But is it everything? Unknown. Are we very aware? Absolutely. It's like AI agents is certainly the topic of the day, isn't it? So
Yeah.
There's plenty of companies within our portfolio that have some form of take on, AI agent and what they're doing there for their particular industry.
What about investors using AI to scan through the thousands of pitch decks that you receive? Is that something that you're doing currently or plan to do?
Well, too right. So the guys write up great internal memos. We're using them to reformat into lots of different bits of content that we can serve up to our underlying investors that we can use for marketing. I think taking pitch decks themselves don't really get into the gritty. You need to be able to see whites of eyes and talk to these people and understand the founding teams. And it's so much more than words on a page, right?
Yeah.
It goes back to sort of comment before. But I think in terms of once you've produced information, once you've got information on founders, what can you then do with that information across other areas of the business? So we're absolutely focused on that, whether it's marketing or whether it's investor relations, which is a fundamental part of Haatch with 1,400 odd investors across our funds.
Amazing. Jonathan, any closing comments that you have for people watching or listening about yourself, Haatch, the market? Any tips, anything you'd like to share with us?
Into this year, I'm a big believer in access to capital and access to assets generally. So the only other company I'm not mentioned that I'm quite involved in is a business called Wineify.
I know it. Yeah, well.
And what we've been going about 12 months, so 7-figure revenue. We have been pushing investment grade wine to retail customers within syndicates. So you can't afford some of the best wine on the planet as a single investor, or many people can't. So bundling that up into syndicates. We also partnered with a large holding company called Coterie, who are an investor in Wineify, and they allow us to access wine at great trade prices, as well as supporting us with storage. So all of that gives us the best possible place in the market to deliver great investment returns, which is ultimately the proposition. And the reason I tell you the story about that is because, again, I'm passionate about investor access to assets and also founder access to capital. So one of the other things at Haatch that I'm very, very keen on and will continue to do more of this year is allowing retail to invest in venture capital.
Yeah.
And Haatch have led the way with that. We've raised over just under £2 million across the Haatch SCIS fund to date, which invests in 10 to 15 companies per fund. It's all SCIS eligible businesses, so you get 50% income tax relief. And you can invest in that fund from £2,000. Whereas before we took that product to market, the minimum you would need to invest across any of those funds would be anywhere between 10, 20, some of them have 50k minimums.
Right.
So opening up that asset, opening up wine, I'm very passionate about that as a point. And I think for founders as well, the ability to access capital, where you don't need to be looking to be £1 billion business. I think crowdfunding as a source of capital allows you to build a £10 million business, right, or a £20 million business. But do that through the power of your customers. Do that through the power of your network, and giving people the ability to do that. Again, is something I'm very passionate about. So hopefully we'll see more of that. I'll go on one bit longer, but I really feel like we've gone through a big cycle. 21 was big boom and bust. And I feel like we're resettling now into a territory where valuations seem sensible. Crowdfunding seems to have settled. It's starting to pick up again. We're starting to see some bigger rounds in that space. Investor confidence. I'm not ever an optimist, but I feel like investor confidence is starting to come back.
Good.
We've sort of, not out of the woods yet for sure, but I do feel like we're going to see we're going to see some bigger rounds. We're going to see a lot more confidence across both investors and founders across 25, and hopefully beyond as well.
Amazing. Jonathan, it's been brilliant having you on the podcast. I really appreciate you taking the time. If anybody wants to get in touch with you, for want of spamming you, what's the best way? Would it be LinkedIn or via Haatch, or how should somebody get in touch with you?
Yeah, I'm just JK at Haatch. Haatch is AATCH.com, or LinkedIn's good.
Excellent. Cool. Thank you again, Jonathan. Guys, if you've liked this podcast, please do like and subscribe. We really appreciate you listening and watching, and we'll see you on the next one. Cheers, everybody.
Thanks,
bye.
Thanks for tuning in to Launchbase. If you enjoyed this episode, don't forget to subscribe and share. Stay tuned for more insights on tech, funding, and product launches. See you next time.